All right. Good morning, everybody. Welcome, Bitcoin Brandon from Los Angeles, California. It is Thursday. The week is almost over. Christmas is almost here, and the year is almost coming to an end. Still a lot of work to be done today and this year. Not over yet. Go ahead and type in the chat box where you're listening in from, and make sure you hit that thumbs up button. Let's see, we have Nicholas from Sweden. Sean, the voice, Robinson from Philly. Marty from Victoria, Texas. Tony Pinkston, Philadelphia. Barbara Brown, Vallejo, California. Mafoose, Laurel, Maryland. Arthur Sims, New Jersey. Terry Moreno. Elijah Morgan, Hercules, California. Tracy Kubish from Mississippi. Barbara Brown. Jonna Jones from Ohio. Brad Gibson. Darnell Abram from the OKC. Bethany Gibbs, Seattle. Court Gomes. Diana Townsend from Delaware. Court from Florida. Good morning, everybody. As a disclaimer, I am not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed, intelligent decision on which direction you want to move into. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, invest money you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? Make a decision, find a vehicle, KGX, stay focused, and don't get distracted. 2019 is going to be a pivotal year. There's going to be many things popping up. And this is going to be the most important time that when you start a project, you finish your project, or you will be bouncing around everywhere. Self-discipline. Now, this is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. So this is an exciting day in the markets. I stayed up until 3:30 a.m. Why? Because I figured something out again. You know, you never stop learning. Let me turn on screen share, and I will share with you what I found out or figured out by noticing a pattern the last couple of days. And as I've shared that in my day trading, I've been doing it a certain way. I want to be able to figure out a pattern that allows me to be able to set a buy and sell order and walk away from it, almost like a bot, and not have to be looking at the screen all day, and do so in a way that I execute at least 2 trades a day. If I can do 2 trades a day and average at least 2%, I know if I have $10,000 to trade with, that's going to get me about $6K a month at 2% a day. So it's not going to happen exactly like that. Nothing is 100% guaranteed. That is just an average, a goal that I am shooting for, and seeing if I could figure out a pattern, a routine, because I'm a routine type of guy, not sporadic. I like routines. And if I can get myself in the habit of following certain routines, and then that becomes, to me, automatic. Like, so how are you doing 2 crypto talks a day? Isn't that taking up a whole lot of time? I can say the same question. How are you working an 8 to 10 hour job every day? Doesn't that take up a whole lot of time? You've created the habit of doing this, so it's not nothing to you anymore. Same way I am with here. So if I could figure out how to make sure that I am doing this automatically, but I got to find the points, and my computer is moving slow, molasses on me here. But what I figured out is that a lot of action is always seems to be taking place, and I'm in Los Angeles Pacific time, between the hours of 10 p.m. and 3 a.m. Why those hours? Well, because Europe, Africa and Asia, it's morning for them, and they are just getting their day started and moving on the markets when we're asleep during that time. And I missed out on 8 to 10% the other day because I set a sell order at a certain price and it skyrocketed higher than that price. And had I been looking at the chart, I would have been able to notice that and capitalize on it. So last night I decided to stay up, took a nap in the afternoon, stayed up till 3 a.m. and I made how much? Oh, come on, computer, don't freeze up on me now. 7.45% I made yesterday in trading. If I was trading with $10,000, that would have been a $745 day. Well, technically, I did that last night because nothing was moving all day for me. So that would have been 2 trades because I did one, I got 6.21%, and one, I got 1.24% on 2 trades last night. It was back to back. The market was moving that fast because, like I said, Asia and Europe was up. So, and I'm going to show you this right here. So, for example, and in the future, especially for time, I just don't like doing so many multiple broadcasts. I'm going to be splitting this up. I had a good talk with Diana last night, and so she gave me some good tips. So what I'm going to end up doing with this, because I did say I want to chart with you guys my progress in day trading, I'm going to split this up in my crypto talk. So my crypto talk, I'm just going to talk on the news. We'll look at the market. I'm not going to show my trades. And then I get right into the news because I realize this takes up maybe about 15 minutes or so. And then in our private members only group, I'll do short updates on my trades, split it up in 2. And so that members only are getting that value. But today I'm going to show this. So the market is at 135 billion. Last time I did this, it was at what? 121 billion. $14 billion has been added in the last 9 hours or so. Bitcoin dominance at 53.8%, which meant a lot of that money went to the altcoins. Bitcoin is up 9.24%. Ripple is up 2.2. I think one of my trades just ended. We're about to see. I see 4,186. Ethereum 11.29%. Bitcoin Cash 47%. Look at Bitcoin Cash is on a run. It's almost back at $200. Remember the strategy I said yesterday? You don't have to just trade on Bitcoin. And I'm going to start to do this. If I get into a situation where I make a buy order and then the market drops on me, which means if I were to sell, I'm at a loss, I'm going to switch out of Bitcoin and I'm going to look at one of these other coins. Let's say if I did that in Bitcoin Cash. Yeah, I take a loss because I'm selling, but this thing went up 47%. What if I sold at 20%? I make my loss back, then plus profit. Huge profit. Bitcoin SV went up 27%. Both of them are on a run. IOTA up 14%. And I hope I am making sense. And again, I am trying to remember that not everybody is advanced, but I am just backing, I'm piggybacking off of previous talks and lessons. So if you've been listening to me, you're kind of keeping up. And I'll be mindful of not everybody's there yet. But I mean, this is exciting. This is exciting. Let's see the best performers of the last 24 hours. Something called Crypto.com chain. Never heard of that. 49%. Bitcoin Cash. Then Bitcoin Diamond, PIVX, Bitcoin SV, Verge, the porn coin is up almost 20%. Look at all these in double digits, and we're talking healthy double digits. This is a mini run taking place. So I'm actually going to do another trade while talking. Ethereum Classic is even up. See, when the river rises, all coins rise with it. All of them. You see this? When the river gets drained, all coins drop with it. This is one of those reasons why I am actually glad we did not get the green coin on the exchange the last 2 months because I know 90% of the people that ordered the green rigs have absolutely, at best, basic knowledge of what Bitcoin and crypto is. They have no idea how the trading market works, no matter how many videos we have out here. Can't force them to engage. That's when you literally got to hold their hand and put their head in front of the computer. And if they saw value dropping like a rock, they'd be screaming bloody murder. I'd have 1,000,001 phone calls, people calling me a scam artist. You know the drill. So I'm glad that didn't happen. And if I were green, I wouldn't put it on the exchange until I see a huge momentum of volume. It doesn't matter how great your project is. At the end of the day, you need to have money in the system for it to work. So as this starts to skyrocket back up, now's the time that you get it on the market and then let it rise with the tide. So that sucker go from 2 cents to 20 cents to 40 cents. Ching. What are our worst performers? Mobile Go, Dex, Quash, none of the top coins except Maker was in the negative. Everything is in the green today. Let's look at it more closely. Chart. Last price was 40.55. 24-hour high was 41.18. Oh man, what did I put my sell order at? I put it at 41.50. I should have. I could still. It got to 41.18. Let's see. When did it get here? Right here is at 40.48. I might drop that down to 4,100. Let's see how high this can keep going. All right, let me show you guys an example here. And I've only been trading really kind of when I'm on live with you guys. I began this in the beginning of December 4th. Remember, I started with $245. Since then, I am out up to $463. So I've doubled my money in that time period from my trades. The last trade, like this was what happened last night. I did there was a buy order, 37.66. I sold at 4,000. That was like 6%. I bought at 39.51. I sold at 4,000. That was about 1% or so. I bought at 4,020. And I'm selling at 4,150. So I can actually, what is it right now? 42. 40-20. That's not, I want more. Saying I want more. I know that's going to give me about a 5% if it gets to 41.50, maybe a little higher. I might chicken out. I'm going to watch this chart. See, it's on the upward trend, the squeeze, but it's separating now, and it's separating with an upward trend. So if that can get to maybe 4,100 and I start to see it slow down a bit, I'm going to sell. Even at the 4,100 mark, take that profit, and then I'm going to buy back in on the rebound dip when it comes back into this area. And then I'll put another sell order in at 41.50. That's my strategy there. So that's a quick, maybe 4 or 5% gain. And then I back it, turn around and do another 1% gain, which comes to, I'll get over 6 to 7% today. Now let's do the math on that again. What if you were setting it up and doing 6% a day at $10,000 that you're trading with? Now you're looking at $600 a day. That's $18,000 a month. So you see, without having to recruit, without having to sell anything, letting your own money work for you. Now, you're not going to get that every day. There's some days you might have zero. There's some days you may be in a loss. Even though I've made I started with 224 or 245, and I'm up to 463. I actually lost somewhere in there about 40 because I bet wrong. The market went down, And instead of sitting and holding, because if I sat on hold, I would have been holding it for 3 days. That meant that's 3 days of no trades taking place. I still have my value, but I didn't make any money. So I took the loss. So I took a $40 loss, but ended up making $120. So, because I got right back into it. And look at this, what's happening with the sell wall. Since we crossed 4,000, now there's the big wall doesn't hit until 47.50. So this thing can run all the way up before it finds resistance again, at least another $400 or $500. So this is why you definitely you can make a lot of money in this during this process. The bottom resistance is 3,900. So you're going to see buy orders right now. There's like I say 4,034, 3,980 is the bottom buy order. 3,975 that I'm seeing. The top sell orders is at 4,047. So these guys are playing between that $40 to $60 price swing. The bot that I think is manipulating, because it's actually never selling anything, has a buy order at 4,010 and a sell order at 4,078. I'm going to sit on this 4,150 and see if it hits that mark and I get my 5%. Then I'll go ahead and do it again and see how many trades we can do today. If I do a buy order higher and the sucker drops, I'm going to do something new. I'm going to go to one of the other coins and I'm going to execute a sell of my Bitcoin and buy a bunch of that coin and then let it run up and then sell it at a high percentage and then come back into Bitcoin. That's a new strategy I'm going to practice doing. This is all practice. Understand, ladies and gentlemen, that there is no right or wrong way in here. There is only strategy. What is your own strategy? What is your personal goal? Nicholas, what is that? CompoundDaily.com. Thank you for, we talked about that, finding a calculator that people could use to see what their profit loss is. Hey, Nicholas, if you could do me, well, you know what? I'll do it as well. I'll look at it after this and we'll post it in the group. So everybody can calculate when they do their trades, what percentage, and the amount of money you make is not what's important. It's the percentages between your trades, 2%, 5%, 0.5%, because then you can calculate, man, if I had $20,000 and I was trading with this, I would have made $4,000. You know, when you might start on, you might only be doing $30 right now. You're practicing. I am going to, at the end of this month, just so you know, for full transparency, even though I started with 245, I'm actually going to dump more money into it. I'm going to probably drop another 500 to get above 1,000, and then I'm going to periodically drop more in there, as well as day trading, to get as quickly as I can into 10,000, and then trade on that 10,000. And so that's my goal, personal goal. So each of you can have your own personal goal set. Like I said, there's no right or wrong way. It's just you just getting in the game. So I'm going to first cover an article that I didn't have time to finish yesterday. And let me know if what I said, was beneficial, if it made sense to you guys. I need the feedback. I don't want no feedback and I'm continuing to do something you guys don't want to hear or see just because I'm used to doing it. Manipulation. Let me post this. I fully believe manipulation is taking place. So let's see if I can learn something new. Or this even backs up what I've been saying. The markets were euphoric. The community was cheerleading the imminent launch of Bitcoin futures first on the CBOE and then on the CME. Bitcoin reached its all-time high. They saw this as an indication that institutional investors were just around the corner and that Bitcoin was about to go to the moon. Fast forward today, and the feeling is quite the opposite. Holders are. I'm telling you right now, I refuse to ever say hodlers. That's just not in my vocabulary. I know it's popular in the crypto space with all the crypto nerds and everything. It's cute because somebody misspelled hold. I just can't do it. Holders are left scratching their heads and licking their wounds. So what happened? While there were a number of factors that drove Bitcoin into one of its worst bear markets to date, one cannot ignore the potential negative impact that these futures had on the market. In this article, I will take a look at how futures contracts could have been used to skew the markets and why contract delivery is such an important distinction for a futures contract. But first, let's start with a bit of futures theory. Okay, pay close attention to this, guys. Cash versus physical delivery. When it comes to futures contracts, there are two main types that exist on the financial markets currently. There are cash-settled futures and those that involve physical delivery of the underlying asset. When you enter into a cash future, you are merely placing a side bet on the price of an underlying asset. You will post a certain amount of collateral for the futures contract, which will be adjusted based on the profit loss of the contract going forward. They're not actually buying Bitcoin. They're betting on it. If a futures is not closed out before maturity, it is settled by delivering the underlying assets. When there are alternatives about what is delivered, when it is delivered, and where it is delivered, the short position can choose among these alternatives. A few contracts are settled in cash. For example, stock indices and Eurodollars futures, settled by paying directly the profit or loss of the futures contract, which is the difference between the spot and the delivery price at maturity. Due to the margin mechanism, daily gains or losses are already reflected in margin accounts. So all contracts are declared to be closed out after the last trading day. And I think the CBOE just had their close. So they went live a year ago on the 17th, December 17th. And that's when all hell started to break loose, literally. Cash versus Bitcoin. Okay. On the expiry of the contract, the exchange will settle the futures trade purely with cash. There will be no exchange of any of the underlying asset, which means they're not even exchanging Bitcoin. It's just physical money. This is mostly used in cases where the underlying asset is hard or impracticable to deliver. Cash futures are often used in the equities futures market when the traders are taking positions on an equity index such as the S&P 500. In this case, it is much simpler to just settle the trade with cash. This is in stark contrast to the physically settled futures contracts where the counterparties are agreeing to exchange the asset at the end of the contract. The long party will take delivery of the asset from the short party on the expiry of the contract. The delivery location and terms will be stipulated in the contract, and the exchange will enforce the underlying rules. This is mainly used in the commodities markets as well as the Forex markets. We're going to start to learn more about Forex soon because we're going to be launching a Forex trading desk. So keep that in mind. Now, Lindo, they're not trying to destroy Bitcoin. They were trying to hit the reset button. It ran up to $20,000 from zero without them. So by coming in and betting against it, they forced the market down because they got the money to do so. They're buying the dip, and then they're putting the infrastructure in place that's going to allow the system to maintain and sustain the amount of money they're going to bring to the table. Then they're going to release the brakes, and the market's going to shoot back up. Yeah, but they did make a crash, if you want to call it a crash. They did it purposefully, but they're making money off of this. Those that are not educated, don't know what's going on, they freak out thinking they're about to lose everything, and they sell at a loss. That's right, Lindo. They crash it and then bring it back up. Cash future manipulation. Given that a cash-settled future involves no transaction on the underlying asset itself, there are no parameters that are set as to how the futures contracts will be used. The only variables that are stipulated in the contract are the expiry price and time. This basically means that anyone with a large enough position in the underlying asset can impact on the price in the futures market by buying and selling in the physical market. How do we know that this can happen? It is a well-known market manipulation tactic that is called banging the close. I have never heard of that before. Hey, I'm brand new too. I'm learning. Banging the close. There has been research done on the potential for this manipulation. There is also precedent of it being used in the past by some firms. Okay. CFTC, DF, disruptive trade practices, disregard for orderly execution of transactions during closing period, banging the close. Any intentional or reckless activity, bids, offers, and executions that may disrupt the order lines of the market. Includes pre-closing activity, accumulating sizable positions leading up to the close, then large liquidation. In other words, pump and dump. Pump and dump. You're right, Lindo. They did that in the 20s. They also did it in 2008. And guess what? It's happening again right now. Look at the stock market. You can't turn on the news right now. It doesn't matter what channel you turn to. December is coming to be the worst since the Great Depression. We are living right now. The stock market is performing the worst since the Great Depression. That's before any of us were born. We're living through it right now. You got to appreciate the good and the bad. History's being made. Whether good or bad, it's being made in front of our eyes. Hedge funds with large positions in the underlying asset could create activity in the price prior to future expiry dates. They will try to use their position as well as other tactics such as negative marketing campaigns to drive the price down. You can read more about some of the tactics that were used on Herbalife shares in the past. Okay, well, that was when you had that, I forgot that guy's name, that put $1 billion bet against Herbalife. Of course, this is very risky in the transparent and very public equities market. People can see in the order books who is trading what and when. Regulators such as the SEC and CFTC have actively pursued market manipulation cases. Unfortunately, thank you, Lindo, it's Bill Ackman. Unfortunately, in crypto, you can see it. You just don't know who's doing it because you don't know who owns the wallets. Like I know right now, I've come to the conclusion that this bot here, 50 Bitcoin buy order, 50 Bitcoin sell order, is some form of manipulation because I never see any of these actually being fulfilled. It is constantly adjusting the price. I never see those orders falling in the market trades, in the trade history. You don't see it. Not happening. So I don't know if it's being controlled by Polonius themselves or if you have a whale in there that has a bot set up that's moving the market that way. And then in another account, they've got this one like here, 14 Bitcoins being bought. 2 Bitcoins. Let's see how many others, any others, 5 Bitcoins, 1.9 Bitcoin. And then same over here. You see that 50 Bitcoin there, never moving, but the price of the buy and sell is always adjusting. 4 Bitcoin there, 3 Bitcoin, and everybody else is kind of following that. So far, it's been kind of correct because even though it makes adjustments, I keep my order and it hits that order. And then I do a new mark. So I'm curious about who this is or what's doing it and what the purpose is, but it's been working for me so far. I doubled my money. This is rinse and repeat. You're just flipping your money. That's how I flipped $30 into 6 figures. Okay, back to the article. BTC futures manipulation. Even before the launch of the CBOE and CME firms futures, there were many investors who were looking for a method to short Bitcoin. The introduction of an exchange-listed futures contract was an open invitation. Moreover, given that these futures were cash-settled, hedge funds and crypto whales saw a lucrative opportunity for dubious contracts. Or for dubious tactics. This was even postulated prior to the launch by the Wall Street Journal as they talked about the risk of manipulation Indeed, it seemed quite suspicious that the price of Bitcoin reached its all-time highs just prior to the CME launch. It is entirely feasible that large investors were accumulating physical Bitcoin, thereby increasing the spot price and subsequently the future price. Banging the open, so to speak. You see what they did there? I'm going to read that again a little bit slowly. Large investors were accumulating Bitcoin, thereby increasing the spot price and subsequently the future price, and then betting against it. Banging the open, so to speak. Collapse of global Bitcoin markets after CME futures. As the contracts opened up for trade, those same individuals started accumulating short positions. In the cash futures market, they locked in futures expiry prices of close to $20,000 for contracts ending in January. So here's the height, December 17th, launch of the CME. Boom, everything went downward since. That's not a coincidence. So they started banging down the price on the way to the close. Those who had accumulated their Bitcoin holdings in the run-up to the futures open could now start selling them in the spot market. They locked in higher price levels on these physical holdings while tanking the price and profiteering in cash on the futures market. It's almost like double dipping. Cash in, buy again, rinse and repeat. The CBOE and CME were aware of these risks, and hence they decided to use exchanges that did full KYC, which is know your customer, as the reference point for the futures prices. For example, the CME referenced a collection of 5 reputable exchanges, including Coinbase, Bitstamp, and Kraken. The CBOE referenced the Gemini exchange. However, there is in no way to contain a large and opaque global market. Most of the Bitcoin trading volume was being done on offshore exchanges. See, that's why I stayed up to 3 a.m. because I knew when Asia and Europe woke up, a whole lot of movement was going to take place. So by the time we wake up, oh, well, the market's in double-digit green. When that happened? When you were asleep. However, there is no way to contain a large and opaque global market. Most of Bitcoin trading volume was being done on offshore exchanges where there were less thorough KYC practices. If global prices start falling, so will those on the reference exchanges. In theory, it sounds plausible, but did it actually happen? Correlation or causation? If one were to take a look at the Bitcoin peak and then fall, it seems to perfectly map the introduction of the contract. While there was not an explosion in the futures open interest when the CBOE contracts went live, volume steadily picked up when the CME futures started trading. We need to look no further than the comments by the Federal Reserve Bank of San Francisco. They feel confident enough in their assertions that the futures markets had a significant impact on the Bitcoin market. That is true. So when you had the Federal Reserve speaking on this, you had like Bloomberg, CNBC, you know what they all were saying in December to the run-up when the price was already above 15,000? Buy, 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 buy. And then all of a sudden, when the market tanked down to 12,000, they said, sell, 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 sell. Who in their right mind would buy high and sell low? They're complicit in all of this. Why? Their buddies they're probably in the market themselves. They're making money off of what they report. It was already shown. If you did the opposite of whatever CNBC said, you would be right 95% of the time. Do the opposite of what the media said, and you're going to be correct. If they said buy, that's when you sell. If they said sell, that's when you buy. Federal Reserve said the new investment opportunity led to a fall in demand in the spot Bitcoin market and therefore a drop in price. With falling prices, pessimists started to make money on their bets. So those same people who were critical, who were running their mouths like Bill Gates and Warren Buffett, Jamie Dimon, all of the billionaires running their mouths that crypto's bad and everything. And then all of a sudden over the summertime, you start seeing that they not only are into crypto, they created their own companies in crypto. They started making money on their bets, fueling further short selling and further downward pressure on the prices. So while they are not laying out a case for any sort of coordinated manipulation, they are explaining the exact dynamic that would take place if it were happening, which happens to be exactly what's happening. One can also observe the large uptick in the volatility of the spot market on the expiry dates of the futures market. As noted by Tom Lee of Fundstrat Global Advisors, this shows that traders could have been actively trading the physical market to impact on the cash futures market. You know, I'm smiling right now because this just goes to show education, how important it is. I didn't need to read an article like this to know this was taking place. I've been saying this at the beginning of the year. This is only validating it. Well, I'm not freaking Nostradamus. I'm just using the information I have, the education that I've gained, and I've come to a conclusion. You know, just follow the breadcrumbs. That's why we tell you guys, education is so important. Don't neglect it. Oh, I can't sell a $300 education product because people don't think they can make money. Really? It's made me 6 figures plus, going to 7 figures. Education is the priceless part. Can't skip on that. So while this is not a decisive evidence of manipulation, it does not paint a dire picture of the listing of NASDAQ cash futures and the impact that this could have to further drive unnecessary volatility. So what can be done about this? Physical delivery. Bitcoin is an asset that is incredibly easy to transfer. It is easier to transfer than shares, commodities, and even fiat currency. Hence, it seems to be an ideal candidate for physically delivered Bitcoin futures. The counterparties to the derivative contract will enter a futures contract as it was intended. They will agree to physically buy or sell the asset on expiry. This will also mean that the individual who is shorting selling the Bitcoin in the future will have to place the Bitcoin into storage to physically send it to the buyer. Can they force that? Can they force them to do it that way? They cannot use that Bitcoin separately to create buying pressure in the physical market. More transparency, more certainty, less volatility. Physically delivered Bitcoin futures could actually contribute to a reduction of volatility as businesses and investors secure guaranteed future prices for their eventual transaction. If you are day trading, you want volatility. That's where the money's being made. It doesn't matter what the price of Bitcoin is. It could be 15,000, it could be 5,000. You can still make money on the volatility. You know, it's just people in the stock market are used to volatility, meaning moving 0.2%. in the crypto space, we're talking about, you know, you'd be moving 15, 20. If that happened in the stock market, people would be jumping in front of trains. I don't mean to say it that way, but you get the point. Here's how I say this will be corrected. When you have more volume in the system, therefore, any market manipulation is only minimal. Since there's not a lot of volume in the system, then here's what's happening. It's easy to manipulate the market because one big whale moving $300, $400 million worth of stuff, all of a sudden everybody starts jumping. Whereas in the stock market, 300 million is not even going to bat an eye. One of the important things that we'll be launching is their physically delivered backed Bitcoin USD daily futures contract. These call for delivery of one Bitcoin held in a backed warehouse. That is interesting. The backed futures contract. This means that counterparties will store their physical Bitcoins at backed, which will be held in fully transparent manner to the expiry. The future seller cannot use that Bitcoin in any capacity in the physical market before termination of the contract. That's smart. So in other words, here's what is taking place right now. They're able to buy Bitcoin and it's not physical. Okay. They're able to buy the Bitcoin and then turn around and bet against it while making money on it at the same time. So while the contract is still going, they're making money. What this is saying that if you give up physically your Bitcoin, you can't now double dip and make money on that Bitcoin while betting against it at the same time. These contracts will allow for block trades and will take advantage of ICE's proven financial market infrastructure and technology. The backed Bitcoin futures are set to launch on the 24th of January next year. It will be interesting to see whether these products will be able to tame any of the volatility that the cash futures helped spurn. Conclusion: it has no doubt been a tough year for cryptocurrency markets. The community was hailing any sort of potential institutional adoption without consideration to the impact that it could have on the markets. Cash futures were one of those products. The markets are comprised of some really smart hedge funds, crypto whales, and algorithmic traders. They knew the exact dynamics that cash futures could bring to the still nascent Bitcoin markets. Yeah, the big boys came to town with a whole lot of money, and they caused this. Whether they actively took advantage of this to enrich themselves, of course they did. Why? What? Oh, they didn't do it because they weren't trying to make money? No one can really tell. What is clear, though, is that cash futures didn't bring the avalanche of institutional adoption many were hoping for. So as we usher in the new year, let's focus our attention on the types of financial products that actually bring value to the ecosystem and aid adoption. I agree with that, and that's what's been happening all of 2018. It's been nothing but good news in the infrastructure of crypto. All right, I'm running out of time here. I've got a one-on-one meeting at Starbucks in 30 minutes. Let's see here. Crypto market adds 29 billion this week. So those of you that were day trading this week, you made some good profit this week. Let's take a look. Can momentum be sustained? Now, if you remember what I talked about, that crypto oracle, his name is Da Vinci. He says that this would be what's called a dead cat bounce. It looks like it's a rally right now, get people all excited, pump money in, and then it's going to drop again all the way to the 2000 region. That's what he claims. So be on the lookout for that. Don't be surprised. This week, the valuation of the crypto market increased by 29 billion. Oh, did I put this link in the chat box? Yeah. 29 billion from 100 billion to 129 billion within a 5-day span. Led by the sudden increase in the Bitcoin price, the crypto market experienced a surge in its valuation by nearly 30%. Following the initial rally of Bitcoin to 4,000, many technical analysts expressed concerns toward the sustainability of the recently found momentum of the crypto market as Bitcoin started to retrace. Again, you just look at the buy-sell wall. We've got a couple of major bumps here. We've got 4,125. Then we've got 4,722. Then we've got 5,000. And then major wall, 6,350. These are the major bumping that's going to meet resist. So if Bitcoin passes 4,092, it's going to have a run up and then hit a wall again. And right now, what is the price at? 4,000. So it's retracing a bit. Now down to 3,900. So I'm still sitting on my order of 4,150. So we'll see. I see the top Bollinger Band starting to come down. The bottom one is starting to level off. So we'll see if another squeeze happens and then if it continues to go back up. But anyways. Can crypto markets sustain momentum? A cryptocurrency trader with the online alias, the Crypto Dog, said after the initial corrective rally of Bitcoin that the price trend of the asset has become poor with an immediate pullback to 3,700. The trader said that if the dominant cryptocurrency struggles to rebound from 3,635 and resistance levels below it, the corrective rally of the crypto market on December 19th may reverse in the short term. That hasn't happened yet, because he's talking about 3,635 to 3,700. We're well beyond that. We're up in this range now. I'm astounded with how terrible BTC looks after just 2 hours. It could not have become more wrecked in a short amount of time, noted the trader. Saka, a cryptocurrency technical analyst, said that Bitcoin already dropped to its initial resistance zone and is at risk of falling to the 3,500 region in the days to come. So he's saying that right now, even though it's sitting at 4,000, it can lose $500 in the next couple of days in a correction. If that were to happen, that would mean that the crypto market cap again would lose about 35 billion. Nah, not that much. Maybe 15 billion for it to go back down that low. Maybe 35 billion. Where was it at when it was at 102 billion? $3,200 range. So the analyst said, I was out of all my longs yesterday once we hit the target, missed out on today's move. Bitcoin flipped the resistance zone as support and commended another leg up, sweeping the 3840 stops. Again, when you hear what he says, what does it mean? These are the stops, what I went over. Stop, 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 stop. All the stare up stops that's happening. So you know the lingo. Again, and now that you guys are learning to trade, when you hear me doing these crypto talks, things are starting to make sense now. You understand it. Looks to me like we'll retrace back to the initial resistance zone. To recover from one of the largest sell-offs in recent years, the cryptocurrency market has to demonstrate stability and a gradual increase in value. A sudden spike in the price of major crypto increases the vulnerability of the market to a big drop in value, especially if it is not supported by sufficient volume and trading activity. Okay, so where's the support? The support is sitting at about 39.45, and then after that 38.80, and then after that 38.60. That's not bad. As of December 20th, the daily trading volume of Bitcoin remains at around 6.6 billion, which is relatively high considering the volume the asset demonstrated throughout the past several weeks. But for an asset that recorded an 18% surge in price within a 4-day span, its volume still remains weak. If the recent corrective rally is followed up by a consolidation period and a stable few weeks, that can provide some basis for the market to climb on top of. A midterm rally remains a possibility. If the asset class continues to demonstrate such a high level of volatility, then volatility on the downside can also be expected. Low volume assets already falling. Stellar, Cardano, and other cryptocurrencies with a daily trading volume below 100 million have already started to fall against both the US dollar and Bitcoin. Depending on the level of volatility showed by major digital assets throughout this week, the market could prevent a downtrend from occurring in the short term or drop to major resistance levels. The crypto market has shown strength at 100 billion, and this week's corrective rally likely materialized as oversold conditions triggered an abrupt recovery. So let's take a quick look at those other coins. Stellar. Don't freeze on me. Let's come bring it back up here. So again, while that's loading, what coins we talked about? Stellar and Cardano. I've been big on those two coins since the beginning of the year. I think that in the long term, when this rally happens, they're going to have one of the biggest percentages of growth. Oh, good, Grizz. Okay, here we go. Bitcoin, Ripple, Ethereum. Stellar is up 4%. Cardano is up 5%. So this article isn't correct in its prediction. It expected these things to downturn. They're still on the upward move. But I think also what's sparking that is freaking Bitcoin Cash up 28%. I mean, just a couple of days ago, this was at $89 a coin. It's almost up 100%. 100% in a week. All right, so that was a whole lot of money for those of you that bet on that one, bought it low and then got it high. One last article, then I got to get out of here. Why a rapid crypto bull run can't be expected just yet. Okay. So let us see here. In the last 3 days, the crypto market added $33 billion to its valuation, and the Bitcoin price surged by 18% against the US dollar. But one trader said that a bull run cannot be expected just yet. Alex Kruger, an economist, a trader, and a technical analyst, said that the cryptocurrency market has simply stopped falling below major support levels and defended the $100 billion support level with high intensity. Crypto simply stopped falling. Nothing else has changed. No reason to expect a rapid bull run yet. May easily print new lows in the following weeks. A wide range is, in my opinion, the most likely scenario to ensue. Nothing to fear of missing out into. Okay. In the following weeks, the trader explained the market could continue to demonstrate wild volatility in a wide range. I like that. I'm going to make money off that volatility. Unable to initiate a strong midterm bull run and a long-lasting rally. Crypto market not ready just yet. This week, the cryptocurrency market experienced one of its strongest corrective rallies of the year. Fueled by the increase in the Bitcoin price, several crypto assets like Ethereum recorded solid gains in the 20 to 40% range, while Bitcoin Cash doubled its value from around $80 to $167. However, in the grand scheme of things, the corrective rally on Wednesday has not reversed the midterm trend of the market. In fact, the crypto market is not even at the price range it demonstrated last month. In early November, the valuation of the crypto market was relatively stable in the $200 to $220 billion range, and the price of Bitcoin was hovering at around $6,500. Since then, at its lowest point, the price of Bitcoin has halved, and the valuation of the crypto market fell by 54%. The promising recovery of major crypto assets in the past 3 days was certainly positive for the short-term trend of the asset, as it allowed the market to avoid a further drop below $100 billion. But Kruger said that it is too early to expect a full trend reversal to occur in the weeks to come, and I agree. He said crypto bullish talk is increasing. Some are deriding bears looking for lower prices. Most of these bulls lost a fortune, are deeply underwater, and are actually best ignored. Crypto simply stopped falling. Nothing else has changed. No reason to expect a rapid bull run yet. A rapid may easily print new lows in the following weeks. A wide range is, in my opinion, the most likely scenario. So in other words, he's saying, hey guys, it's not like this is a corrective rally. It's just, we just hit the bottom. That's all. That's what he's saying. And it's bouncing right now, like a basketball. The best scenario for the crypto market, which has shown signs of recovery, is a gradual and slow build up across the first quarter of 2019. A big spike in value can leave an asset class vulnerable to a large drop in the future, especially in a period of high volatility and market uncertainty. Given the instability in the global market and the tendency of accredited investors to refrain from investing in high risk, high return trades amidst market volatility, at least in the short term, investors in the traditional financial sector are not expected to allocate significant sums of capital into the crypto space. With no major catalyst on the horizon for the crypto market to avoid a potential correction, a gradual recovery would be beneficial for the midterm growth of the sector. All right, that is it for today. I hope you guys learned something new. As always, that is the point. There will not be a crypto talk tonight unless something major happens. And if that does, I normally will do it at 8 p.m. Eastern because we have a KGX presentation tonight at 9 p.m. Eastern. I say it all the time. Education is the key. Education is what's going to take you in 2009 from where you are now to millionaire status by learning a skill set that you now have full control in your own hands. If you're doing right now anywhere between 0.5 to 5% a day on your trades and you're only doing 100 to 200 bucks, imagine if you had $10,000 in there and you're still getting those same percentages. Well, how do you get to the $10,000? Use KGX to raise the money. That's what you do. Take advantage of the affiliate program and then put that money into your trades. Tomorrow night, I'll know today what time we're going to be having this, but we will be having a major update call for the company, give you guys updates on what's going on as far as new status on Green and our crypto trading desk and Forex trading desk that will be launching in 2019. So I'll get that information out as soon as possible. In the meantime, build your business. and continue your education. See you all tonight, 9 p.m. Eastern, kgxglobal.info. kgxglobal.info. Make sure you hit the thumbs up button. I appreciate it. Have a great day. God bless. Bye-bye.